Now I am discussing the most important slide in this full presentation. So pay utmost attention here. See, I can divide accounts in majorly 5 heads. What are they? Accounts. First is your asset. Now, as discussed earlier, what are my assets? My land and building, plant and machinery, debtors, goodwill, my cash balance, bank balance are all my assets. Okay. So assets is good for the business because I have assets. Through these assets or with the help of these assets, I can run my business. So now the major second type of your accounts is your liabilities account. When you need to pay something to someone, that is your liabilities, whether they are insiders or outsiders, anything at any time what your business needs to pay is liability to your business. Say for example, loan taken. Now you have taken a loan and you will need to repay that loan, so that is your liabilities. Okay. What more liabilities can you think of? Sundry creditors. Creditors, I have purchased goods from someone on credit and now I need to pay him back. So my creditors will be my liabilities. Bank overdraft, that is withdrawn more than what I have from bank. So I will need to pay it again, my liability. Okay. Now the third type of account is your capital account. Whatever the owner of the business, the proprietor of the business brings into the business is called as the capital. Say for example, the owner, to start the business, he is getting some cash, some bank balance, some machinery and land and buildings. So all that is brought into the business so that the business can run properly is called as the capital. Now about your revenue or your income. The mode from which I earn in regular course of my business is called as revenue. For example, sales. When I sell something, I get something in form of cash or through bank. So revenue generated by sales. Or say I have put some money into the bank and bank is giving me some interest on it, that is my income or revenue. So anything which is coming to the business from its day-to-day activities is known as your revenue. Say for example, my business is holding some shares and I get dividend on shares, so that will be my revenue. For example, I have some small premises which I let out. I give it on rent. So the rent received will again be my revenue, my income. Okay. And the last and the fifth type of account is your expense account or your loss account. Okay. Now, whatever is parted off to do a smooth business or to generate revenue is your expense. Say salary given to your employees, wages paid, electricity bill, your factory rent, cost of your fuel, cost of your stationery and printing. Such cost incurred is your expense. And for losses, when the expenses are more than your income, that is your loss. So this is your fifth type of account. So you cannot have a sixth type of account. Everything in your accounts has to be either your assets, your liabilities, your capital, your revenue or income, or your expense or loss. So See, as we have learned the dual concept, for every debit there will be an equal and opposite credit. And you know the nature of the account. If you know the nature of the account and you know what has to be debited and what has to be credited, you are 60% done with the entry. Then the 40% will follow automatically. So one more request, please pay attention over here. See, in my T-shaped account, something has to be debited and something has to be credited. That is dual aspect in one transaction. So, I will explain to you what has to be debited and when, and what has to be credited and when, and why. So let's take up the assert account. Okay, assert. When any assert is increasing or coming to the business, that when assert is increasing, coming into the business, it is good for the business. So, whenever an assert increases, just debit the balance or increase the balance of the assert. And whenever the assert is decreasing, or say I sell some asserts, generally it should have debit balance, but when it is going out of the business or decreasing, then instead of debit, please place credit on it. This will be discussed in detail in journal entries chapter. I have discussed as many as 60 entries just to clear these concepts. So, as is the rule of asserts, same is the rule for your expenses. So, when there is increase in any of your expenses, when there is increase in any of your expenses, please debit them. That is, say there is stationery expenses. So what my entries one side will be, stationery account has to be debited immediately because I have done some expense. Or say printing and stationery incurred is 100 rupees. So printing and stationery is my expense. So one side of my entry will be printing and stationery account debit because printing and stationery has increased by rupees 100. And whenever there is decrease in expense or loss, you have to credit it. Okay, so for your asserts and your expense, which are partners, you have the same rule. When they increase, debit them, and when they decrease, credit them. Once you start doing your journal entries and you start applying these rules, you will even slowly get to know why are you doing this. For this point of time, just try to understand a little bit what are the basic concepts and why will come in your way automatically with the help of those 60 journal and entries which we will pass in the next coming chapters. Now discuss about your liabilities, capital and revenue or income. When liabilities increase, say when your liability is increasing, you will have to credit it. For example, say that a loan is taken. So what will be coming into your business is the loan in form of cash or in form of bank balance rising up. So your entry will be bank account debit because that is increasing, and your liabilities to loan. Your loan is here, that is increasing again. So loan account has to be credited because when an liability is increasing, that is your loan is increasing, then you have to credit it. Okay, and when the all the loans, creditors, your bank overdraft have a credit balance, whenever they increase, please credit them, and whenever they decrease, you have to debit them. Same is the case for your capital. See, whenever capital comes in form of cash, the entry is cash account debit to capital. Now to capital means I am crediting capital. This will be discussed in your journal entry chapter, but I am giving you example that capital, whenever that is increased, you have to have a credit balance of it, and whenever capital decrease, you have to mark it as debit. Same for your income. When your income or your revenue increases, credit it, and when your revenue or income decreases, debit it. Don't try to mug up this table. We will have this table attached with each and every of our journal entries, and I promise at the end of those 60 journal entries you will not need this table in front of you, and you will start doing by yourself automatically. Just for now, understand that assets and expenses are partners. Expenses and assets have the same rule, that when they increase you debit them, and when they decrease you credit them. And the other three, the liabilities, the capital and the revenue or income, are partners. That is, when they increase, credit them, and when they decrease, you have to debit them. So this is actually a theory mixed practical aspect and base of your accounting. Now let's move on to the next slide. This is also an important slide. What types of accounts do we have? We have three types of accounts: personal account, your personal account, your real account, and your nominal account. So first let's discuss about personal account. See, anything related to a person, say for individual Ram is a person, a firm, a cooperative societies, your debtors, creditors, your drawings as related to capital, again a person. So, for all the personal accounts, I have one rule which is known as debit the receiver, credit the giver. Okay. Whosoever is receiving cash or through bank, debit that person, and whosoever is giving, credit that person, is the simple rule. Again, you need not mug up. As we pass the journal entries, we'll do it practically and you will understand it better. So this was about your personal accounts. What about your impersonal accounts? Two type of impersonal account is your real account and your nominal account. So for real account, that relates to tangible or intangible asset. Wherever there is asset, just think of real account. Say for example your land and building, plant and machinery, furniture, investments, cash in hand, bank balance, your stock or your inventory, your goodwill, all are your assets. So debit what comes in, credit what goes out. For example, say that you got a land and building into your business by paying cash. So one side is land and building, which is an asset, and one side is cash, which is also an asset. So my rule is debit what comes in and credit what goes out. So what is coming in is my land and building, and what is going out of the business is cash. So I will debit land and building because it is coming in, and my rule is debit what comes in and credit credit what goes out. Cash is going out of the business. I paid it to get land and building into my business, so I will credit it, and my entry will be land and building account debit, because land and building is coming in, and credit so to cash. So what is being credited to cash means I am crediting cash, and cash is going out of the business, so I am crediting it. Again, please don't mug up, just try to understand the concept, because after those 60 entries there is no need to mug up. Your mind will be so programmed that things will start flowing automatically, and you will learn it automatically. So nothing to mug up. As in maths, you cannot mug up the additions or the subtractions. You have to follow a particular list of steps. So is accounts. So moving on to your nominal account. This account relates to revenue or your expense, either income or expense. Let's see some example. I purchase of goods, I sell goods, salary is my expense, interest paid is my expense, commission received is my income. So either income or expense, for those accounts, we call them nominal accounts, and the rule is debit all expenses and losses, credit all income and gains. For example, I paid salary. Salary is my expense, isn't it? Paying salary is expense for business. So debit all expenses. So what will I debit? I will debit salary. Salary account debit, because salary is expense to business. Okay, I paid salary in cash. So salary being my nominal account, the rule will be debit all expenses. So I debited salary. And cash being my real account, any account relating to asset. So cash is asset, cash is going out of the business. Credit what goes out, so I will credit cash. So my entry to pay salary will be salary account debit to cash. To cash means I am crediting the cash portion. Let's discuss it in more and more detail and in practical while doing our journal entries.